Order blocks are one of the most popular concepts in trading. The truth is, most traders see an order block and they just enter. They have no idea of direction, context, whether the trade or the order block is actually going to hold. What I want to look at today is how to take order blocks from just candles on the chart to precision swing trade entries. And it's all about understanding where order blocks sit in the context of higher time frame candle behavior. So let's take a look at this 2.76 hour trade that played out perfectly on GBPCAD. Then we're going to look at a second trade on AUDNZD. So let's get into it. So this is an order block entry. This is the last buy before the sell. And you see what price does. It comes back in and tags the last buy candle before dumping. But why is this the candle that we need to enter on? Well, it all comes down to the connection to higher time frames. So this is the 12-hour time frame. What I want to do is overlay a weekly, 2-weekly, monthly context to see what phase of price are we in. So I'm going to start by looking at the 2-week time frame. And this gives us a lot of powerful information. So what we see here is that we had a 2-week period where the 12-hour time frame trended down, then shifted bullish. This becomes our accumulation candle. What happens next is price then breaks out to the upside and then closes, this is the important bit, inside the previous candle's range. So what this means is that price broke out of the previous candle but then closed inside of its range, sweeping the external range liquidity at the highs of these candles. So we can mark this now as a manipulation. What this means is that we have accumulation, now a manipulation candle, and the next expectation for price is to dump to where? The low of the candle that has been manipulated. This is classic accumulation, manipulation, and distribution. So this now becomes our target. So at this point here, when we start to get this corrective retrace, what are we looking for? Our order block, because this is the sign the price is now ready to move towards our higher time frame target. And if I just take this away for a sec, this is what happens. We have a bearish price leg, price retraces into a fair value gap, the gap between candle 1 and candle 3. Price then consolidates and eventually creates the last buy to sell, which we can mark right here. So this is now our order block. And this tells us that institutions have manipulated price higher, they have accumulated orders, and then dump price. Now they need to fill their order. So price then retraces into the same area, the order block, and that is where we want to get involved in the trade. Where do we target? The low of the candle that has been manipulated. Accumulation, manipulation, distribution, order block entry in context of higher time frame candle behavior. So this is exactly what this looks like. We just place our order on the entry to the candle, and then we set our stop at the high of the order block. Where do we target first? The low of the manipulation candle. This is where we get our fast 2.7 hour trade. But we can actually hold this to the low because this is the technical target for price. This becomes a 4.61 hour. And this is how to take precision swing trades using order blocks. Let's look at another example. So on AUDNZD here, we have the same thing, a blank 12-hour chart. So how do we actually get a read on what price wants to do next? Well, again, let's just overlay the 2-week time frame. And we see the exact same thing happening. We have accumulation, bullish 12-hour price action, until price raids the liquidity at the high of this 2-week candle. What does it then do? It manipulates the candle. It closes back inside the previous candle's range. This then exposes the low of the accumulation candle as our higher time frame target for price. So now let's just map exactly what happens. Well, in this bearish price leg, where is the order block? It's the last buy before the sell. So we can then mark that very easily right there. There's our order block. Then what happens next? Once price starts to tag the order block, it dumps and creates a new order block, the last buy to sell. And you see, we get a first touch tag on the order block as soon as it's created. So we now have 2 trade opportunities. One, we wait for the order block to get tagged. and we can set our limit at the entry of the order block. So that gives us nearly a 3R trade to the low. The second opportunity comes as soon as this order block is created, the last buy before the sell. Cover the swing point, target the low, and that gives us again a 2.87R trade. This is how to take high probability swing trades using order blocks for precision entries. Now, what happens when you take an order block that does not play out? Well, let's take this order block, for example. This is the last sell before the buy in a bullish price leg. But what is price doing? It is manipulating before it then dumps to then reverse and target the low of the accumulation candle. This also happens to be above a previous monthly candle. So what the monthly candle is doing is it's manipulating higher to also go lower. So when order blocks sit outside of context, they don't hold. They become essentially breaker blocks that we can use to take further precision entries. I'm going to cover that in a different video. So let's review. Why do order blocks work? Higher time frame manipulation confirms your trading direction. Are we accumulating, manipulating, or key in distribution phase? If we're distributing, order blocks become very high probability. Price legs or order flow define the entry zone. This is where order blocks are created, and they are essentially the footprint that show institutional positioning. So it's exactly where we want to get involved in the trade to piggyback on the move in the market. Now, this is just one piece of the puzzle. There is so much more to it, and I teach this for free in my 3-part series on candle range theory, which gives you an end-to-end swing trading framework. Check it out on my YouTube channel.